Right now we have gridlock in Washington, a stalemate happening. What's, I guess, BlackRock's take on this debt debate?
This is a circus, Susan, as you know. That was our guess that we'll get something done on the debt ceiling either the 12th or the 13th hour, meaning either just before or just after. It doesn't matter. There's nothing magic about August 2nd. But we're not distinguishing ourselves in the world scene with much leadership here. It's a sad commentary. Our guess is when push comes to shove, the debt ceiling will be raised. What goes with that is very difficult to tell, and that's why the threat of a downgrade still exists.
That is the main threat, isn't it, right now? Because both sides looking at $1 to maybe $2 trillion in cuts. Obama still thinks we're going to get this magical $4 trillion budget cut somehow, some way. But, Senator Poore is saying if you don't get this long-term deal through, it's going to be AA and not the coveted AAA rating.
Yeah, that would not be a happy day. Having said that, I think most of us know the fiscal situation of the U.S. and if we were dropped on the planet and said, "What do you think the debt rating of the U.S. is?" Most of us probably say, given the debt, given the deficits, it's probably a AA. So this will be not a whole lot of news, although the headlines will be big, as you point out.
What about the market impact, though, Bob? I mean, people are talking about severe crisis if this happens, because look who holds treasuries around the world. We're talking about billions and billions of dollars by sovereigns.
Yeah, where all that sensationalism comes from, I'm not really sure. It's a rating. There are a lot of companies in the U.S. that already have a yield below that of the U.S. government. So the debt structure already represents a lower rating than AAA suggests. So I'm not sure we'll have the sensationalism and the fear-mongering that's going on among folks. A default, for sure. A downgrade, I don't think so.
Okay, and we're not close to a default at all. No way, no how, right?
I think the probability of that is virtually zero. I don't want to say zero because this is politicians in Washington, D.C. we're trying to forecast, and that's very tough to do. But we can't find anybody who doesn't understand the severity of a default, and therefore, back to what we've been saying for months, 12th, maybe 13th hour, we get something done.
And Bob, you sound really calm, I have to say, considering we're seeing declines in the market still. And stock futures are down 1% when it looks like there's no deal in sight between Republicans and Democrats. Maybe you can explain to those who are sweating at this point, money managers getting into cash, holding on the sidelines, why this isn't a big deal to you.
Well, I'm not saying it's not a big deal, but look, the U.S. equity market's only a few percent off its high of the last several months, and I think what people are saying is, yeah, we got to pay attention to this, assuming there's no default and it's just a downgrade, we can focus on some other things. Corporate earnings are phenomenal. We're having another quarter where 75% of the companies are reporting better than expected earnings. We're seeing revenue growth in the high single digits. Not bad for an economy that's just kind of muddling along. So we don't invest in the government as equity holders. We invest in corporations, and corporations are doing a pretty good job.
Yeah, that's right. You're right. 75% to 77% of companies I've reported so far have beat, Bob. So tell me about, I guess, the sectors that you're buying into. Technology is looking pretty good, considering we keep seeing these earnings beating results from the big names. Where are you looking to put your cash these days?
Yeah, two areas of overweight. I think in a portfolio, given the slow growth, you need some defensiveness. But given we're in global economic recovery, you need some cyclicality. Defensive choice, healthcare, cyclical choice, technology. I agree. Technology learned a lot of the lessons that other sectors are learning in their smash, if you will, in the Boston technology bubble in the year 2000, came into the Great Recession with far better balance sheets and income statement, free cash flow, and that's all bearing benefits as we speak. On the healthcare side, we like healthcare services continuing to benefit from lots of good cost trends and some revenue growth there as well.
Okay, Bob, before I let you go, one more question for you. When 2011 started and you were talking to us earlier on, you said that markets will grind higher on the year. That's pretty much what's happened so far. But we're looking at 7% gains. What are you predicting at year's end for 2011?
You know, we had a target of a 10% low double-digit sort of total return for the year, Susan. I'm going to stick with that, which means a little bit more from here. You know, the first half we were up 6, we're up 7. Now it's been basically 1% a month. That's not all bad. I take that the rest of my career and be very happy.